Hello and welcome to Women Talk. I'm Beth Battolino, CEO of Healthy Women and your host for Women Talk. Healthy Women launched Women Talk as part of our live webinar series to bring together professionals, healthcare, finance, science, innovation, technology, and policy people to share their connection to women's health and wellness. I am so happy to have Stacy Francis back from Savvy Ladies to discuss how we can improve our financial health and how it plays into our overall health and well-being. With tax day quickly approaching, we want to make sure that you all are prepared. And if you're a bit behind, like so many of us, we're here to hold your hand. We want to make sure that you have the necessary answers and resources for your financial health. And there is no better person to provide that expertise and that advice than Stacy Francis of the Savvy Ladies. Stacy, can you share with our audience your background and how and why you started Savvy Ladies?
Wow, thank you so much, Beth. I'm so happy to be here. And I know that it might be a little nerve-wracking because April 18th is right around the corner, but I am here to tell you all that we've got it in control. We're going to give you some great information. I'm truly committed to changing the way that women think about money, the way we educate ourselves about money. And my passion comes from watching one of the most dearest people in my life, my grandmother. And she found herself trapped in an abusive marriage, and she shared with me that it was that lack of financial stability, that lack of financial knowledge that held her back, that actually became deadly for her, and she passed away because of the abuse. And that obviously was something that completely changed my life, and I've never really recovered from. But what it did give me was the courage, it gave me the anger, I'll be honest, and mostly the passion to help women learn about money, get educated about money. And that's why I started Savvy Ladies in her name. We're a beautiful 501c3 nonprofit. We've worked with thousands and thousands of women over the last 2 decades, helping them through our workshops, through our seminars, and also through our private one-on-one helpline that we'll tell you a little bit about as we go through our program today.
That is so inspiring, Stacy, and thank you so much for starting Savvy Ladies to help so many women with their financial, understanding their finances, and more importantly, improving their path forward. So tell us now. I'm going to dive into a few questions. So tell us,
Yeah.
many of us are kind of scrambling with tax day, as you said, coming up in a few days. What are some last minute recommendations to help take the pressure off?
So, the biggest recommendation is, making sure that you ideally have an accountant review your tax return. And don't worry if you haven't done that already. Something that you can do is you can put your tax return on extension, and that gives you another 6 months to go ahead and have the final tax return implemented and filed with the IRS. But there are two big buts. The first big but is that you still need to put in that request for an extension. You can't just say, I'll deal with it in 6 months. You still need to put in that request for an extension. And the second thing is that the IRS is not patient. You may be patient. I know you are, Beth, and I'm patient, but not the IRS. If you owe taxes, they want their money now. And if you did your return preliminarily, it looks like you're going to get a refund. Well, you're not going to get your refund now. You're going to have to wait till you actually file it in the future. So those are just some important things to know, to make sure that you're doing all the right things.
So that one thing where you said that if we're not ready to file, we can put an extension on it. Is that information on your website on the Savvy Ladies Free Financial Helpline?
So, yes, actually,
Okay,
what's really
perfect.
special is that you can call or go on the website to the Savvy Ladies womentalk.org website. You'll see helpline, click on that, and you can work one-on-one with a financial professional. We actually have quite a few accountants, certified financial advisors, tax experts that can help answer your questions. But I would say do that sooner than later, just because, bless, it's already April 11th. April 18th is right around the corner, and so do that sooner than later.
So I love it. So ladies, free resources. There's no reason to get in trouble with the IRS. You can put a delay on it. Visit the Savvy Ladies helpline that we have up on our site, and you can get some free advice and recommendations on next steps. Question number 2. When you're going through your taxes and laying everything out, it's a window into your life, really.
Yeah.
What are the 2 to 3 things, Stacy, that you can do to improve your financial health for the next year?
I love this question because actually, Beth, there's no other time that we pay more attention to our finances than we do now around tax return time. And so while we're doing that, I really want everyone to use this as a great time to spring clean your finances. As you're prepping your tax return, most of us are going through our expenses. We're looking at maybe our charitable deductions. We might also be looking at if we're not a W 2 employee and we have expenses that were for business, we'll be going through our budget. But I don't want you to stop there. I want everyone to go through their budget and take a look to see what your spending has been for the last 6 months. You can use some great resources on Savvy Ladies. We have a wonderful spreadsheet that you can use for tracking your expenses if you like the pen to paper or Excel. But if you want a little help from the internet wonderful software out there, mint.com, personalcapital.com are all some great resources that when you connect your credit cards, it actually will go back up to 3 months and categorize all that spending for you. So it's a great way. So I would say that's number one. Get really clear about what your budget, what your spending is, because that's the number one most important thing to do to make sure that we're not overspending. Number two, you're getting together all of your 1099s, your dividends and interests on your investment accounts. It's a great opportunity to go and take a look at them, especially with the market volatility that have had. So go on into your 401k, go into your investment accounts, see how they're allocated. Make sure that you have a nice mixture of stocks and bonds. And if you're a medium type of aggressor, a medium risk, maybe that's 60% stocks, 40% bonds. If you're more aggressive, maybe that's 80% stocks and 20% bonds. But that's the other piece that will be really helpful. And the third piece is this. The one thing that we can all guarantee is going to happen to us are financial surprises. Doesn't matter how organized you are. I am one of the most organized people, and there are still financial surprises. So I use this as a wonderful opportunity to start to build that emergency fund, 3 to 6 months of your living expenses. Look at your budget, see what you're spending, see how much money you have left over, and start to put that towards your emergency fund.
Such great advice. Thank you so much. In that 3 to 6 months, that was a question I was actually going to ask you if
Yeah,
that's still the formula. So good to know that. Um, COVID,
yes.
right? COVID obviously has hit everyone very hard, but especially the millions of mothers who ended up leaving the workforce to care for their children and to become school teachers, right? So I know so many friends of mine that ended up having to hit the pause button because they just could not deal with full-time careers that continue to, I mean, it was even worse, right? Because there was no off button. There was no leaving
Hmm.
the office. We were on all 24, it felt like 24/7. And now we have our whole families home on top of our significant others, and we're teaching, because we're helping with the virtual schooling. With that, how should people manage the benefits that some people were given during COVID, meaning the unemployment and the childcare credits?
Yes, great question. And you so hit it on the mark. We've never had a time in history where we've seen as many people, primarily women, stepping away from work. We're calling it the Great Resignation. I've also called it heard it called the Great Quit. And so a lot of individuals have received unemployment benefits in 2021. And the negative piece on unemployment benefits is that guess what? They're taxable. And so as you go into filing your tax return, you need to make sure that you are claiming any unemployment benefits that you have received in 2021. Hopefully, you have put some money aside or had some money withheld to hold that, hold those taxes. But for many of us, we haven't. So that could be something that is a big surprise. But on the plus side, particularly those of us who are moms, we have had the blessing of having a little help. I will tell you, I don't feel like it feels like enough help, but we've had a little help. There have been three economic impact payments, $1,200 in April 2020, 600. Then again, it came in December and January 2021, and then another for 1,400 in March 2021. These checks were essentially credits, and it helped reduce the amount that you owe in taxes. So if you received a $1,200 credit and you owed $2,000 in taxes, well, now you only owe $800. So that helps a little bit. What's most importantly is to make sure that you have received those credits. This is a pretty confusing area, I'll tell you, Beth. And so, what I would encourage you to go is to USA.gov. USA.gov, just put in COVID stimulus checks, and there's a wonderful link that tells you who's eligible. And it also tells you if you didn't receive your stimulus check, what to do to make sure you get it.
That's great. I'm taking notes here because we're going to make sure we have all these resources up too. So USA.gov, COVID stimulus checks, and you can find out the most current information on status and what you can do.
Exactly. It's a great resource because I do have to say that this is very much
I
a
know.
confusing area. And, as a mom myself, it's hard to stay on top of this when you are, running a million miles a week. I mean, I have to tell you, my kids are older. So I have a 16-year-old and I have a 13-year-old. So I'm really blessed that they're much more independent than a 3-year-old and a 5-year-old. But
Right.
at least once a week, I'm in a state of overwhelm, an
No, I
absolute
know, I
state of
know.
right.
I'm right behind you. Right.
And
It's absolutely crazy. But I'm just so glad that you're here with your great organization and these resources to help us all kind of get through this hurdle. Um, one thing that I'm hearing a lot about, and I would love your kind of consumer language on this, is what does it mean to sell losses to offset capital gains to reduce your taxable income?
I know it sounds like this would be something, nothing against Jim Cramer, but I don't know if you've watched that show, but he talks a mile a minute, and this would be something that he would say, which makes a lot of sense to those people who can speak finance, but for the rest of us who are normal, it's a little bit like trying to speak Latin in a room of people who only understand Spanish or French. Doesn't really work. Really, what that is saying, just in plain English, is that you can reduce your taxes by taking a stock that maybe has lost money,
Okay.
selling that to offset when you have a stock that's gained money. So we have a lot of opportunities for that actually right now. And that's why I love this question, because there are certain parts of your portfolio that have had losses in 2022. In fact, possibly in 2021, although hopefully not too much in 2021 because it was a great year. But in 2022, we've seen emerging markets really the bottom drop out of that part of your portfolio with some losses. But then large company stocks have done okay. Bonds have done relatively well. So possibly selling that, something that you've gained money on, and then selling something like maybe your emerging markets that you've lost money.
Mhm.
And if you have $100 in gains and $100 in losses, they wipe it
Break even.
off.
Yeah.
Yeah, it's even. And it's something to think about. What I would do is I would, like we said, take a look at your investment accounts. Look at what's earned money, or look what has lost money. If you don't have a financial advisor, reach out to the helpline, the Savvy Ladies helpline. We'll talk you through that. And if you do have a financial advisor, this is a great piece that they can walk you through. It doesn't mean you have to do this. You don't want to sell things just to sell things.
Right.
But if you do have some gains, let's say you need to sell a portfolio, part of it to put a house down payment, being savvy about trying to offset those gains so you don't have a big tax bill is a definite win-win.
Oh, great advice. Thank you so much. This has all been so helpful, Stacy. Now I'd like to open the conversation up for our Q&As and take some questions from our audience. So if you're
Great.
watching, this is the time. Send some questions in. Great. So we're seeing a question from Jessica. I've heard a few married couples filing taxes separately. What are the
Okay.
circumstances in which it would make sense to do that?
This is such a good question. Should you do married filing jointly or married filing separately? The vast majority of couples file their tax returns married filing jointly. But there are three situations where I would say it might be better to do married filing separately. The first is if you are not convinced that your spouse is being above board with the income they're reporting, with maybe investment income that they're reporting. We see a lot of concerns when someone has what we call a cash business, where they're, receiving a lot of cash and not reporting all of it. I want every person to know that's listening here, if you sign a tax return jointly with your spouse, you are verifying that this is 100% truthful and honest by putting your signature. So if you can't do that with full certainty, then I would say don't do it, because you will be liable, as is your spouse, for any back taxes that should have been paid that weren't paid, any penalties. That's a definite number one. Number two is if you and your spouse are in the divorce process and your spouse makes significant amounts of money and has not been withholding taxes, therefore creating an unbelievable large tax burden that you would be owing 50% of.
Yeah.
So that's another situation, and something to be wary of. And the third is that there sometimes it may make sense with the different amount that people earn. It could make sense for certain tax deductions, but again, it's typically better to do married filing jointly. But I have to tell you, if there's something in the bottom of your stomach that doesn't feel right about all the information that's being reported, know that you need to be careful, because you can do what's called the innocent spouse relief, but it's very rare that the IRS will grant that. They say that if you sign that tax return, you are just as responsible for it as your spouse.
This is such a great question, and thank you, Stacy, for answering it so clearly. We've got another question from Emily. What is the best thing to do with the tax money I received back this year? Do I spend it, save it, or invest it?
Well, you know me, Beth. Spend spend it. It's
Spend
not going to
it.
be number one. Of course, go get a really nice purse. No, um, actually, what I would do, even besides the save it or invest, I would look at, do I have some high interest credit card debt, right? That would be a number one. Pay off
Okay.
any high interest credit card debt. And when I say high interest, I mean like literally 6% or above. That's what I
Okay.
consider high interest.
Okay.
If you've done that, then look at that emergency fund. We said anywhere from 3 to 6 months of
Right.
that living expenses in your emergency fund, in a savings account or something like that. If you've already done that and check that box, then invest it. Saving is great, but investing is being even better, because investing has your money grow for you long term. One of the biggest risks that we have as women have is outliving our money because of our beautiful long lifespans.
Right.
The other risk that I know you've spoken about, Beth, is our medical costs that we have in retirement. The only hope we have is investing that money so that it grows for us and it doubles, it triples, it quadruples, that it grows and supports us in those older years. And it's not going to do that staying in a bank account or in primarily bonds. We got to invest it, and we need to make sure it's in a good amount of stocks that are high quality, that are going to get us there for the long run.
And
Really
this is
important.
something your group can help too. Like, so if you have no background in investment, and this is the first time where you do have some of that extra money where we're not paying off a credit card, a high interest credit card. We feel like we've got enough in our emergency fund. And this is the first year that we feel like, you know what, I've got an extra $1,000 or
Yeah.
$1,500 that I can invest. I can call your group at the Savvy Ladies and say, help me kind of figure out where and how to invest this.
I have to tell you, Beth, those are my favorite queries, whether it's, a call or it's through the website. It's so exciting. It's so exciting. And what I do have to say, I mean, you'll see this when any of the listeners there's call, but it's also not rocket science. I feel like there's so much mystique around investing. There's so much. It feels very much like a boys club. And if I can get this, anyone can get this. I was the girl who never raised her hand in math. In fact, I sat in the back of the class, which was really bad because I couldn't see because I didn't want to wear glasses because I was too vain. Needless to say.
Stacy.
Um, I know. Well, I'm telling you, I've got glasses now, and trust me, I feel good inside and out. But when I was a teenager, I really struggled, and I was afraid of math. I was afraid of numbers. And look at me. I mean,
I
we,
know.
I have a wealth management firm called Francis Financial, and we manage over $500 million and are the one of the fastest growing companies in the U.S. So it's fabulous. But what I'm just saying is that we as women are smart, and we're actually studies have shown we are better investors than men. Our returns over time are higher. Beth.
Love it.
So, what I'm just saying for everybody listening, you got this, girl. You've got this. And even though it may feel a little intimidating, it's okay. We were all intimidated the first time we got behind the wheel driving a car. Every single one of us remembers those butterflies. But now we get behind the wheel of a car and it feels very natural and very comfortable. We don't think about it. It's the same thing with investing. It's just we haven't had as much experience.
So let me ask you a question to piggyback on that. How much do you need to start investing? Is 500 that like what could be? Because I'm just thinking of
$25. 25 bucks.
$25.
Yeah,
All right,
so
that's
there are great accounts out there. You can go to Vanguard, Charles Schwab, Fidelity, where you can open an account. There's no cost. They have very low cost mutual funds, very low cost exchange traded funds that you can buy and get exposure to the entire market by just getting one. But what the goal is though, is once you open it, you make a commitment and you have a certain amount that goes in automatically every single month before you even think about it, before you even try to spend that money.
I love it. Ladies, if you're listening, $25 and you can start investing. Oh, and we've got another question from Natalie. Can you speak to filing my taxes as an independent contractor as opposed to as a full-time employee, which is
Yeah.
that's so relevant right now with so many
It's
people doing consulting versus full-time.
it is. In fact, the gig economy is expected. There are going to be more people working in the gig economy by 2030 than W-2 employees. So this is very relevant to talk about. And some people will be an independent contractor and receive money from numerous places. Well, the number one thing that you need to do is make sure that you have accounted for all your income, right?
Okay.
That's number one. Account for all that income. But the second part, I think, is the really exciting part. It takes a little bit of work, but so does coupon clipping. So I grew up and we didn't have a lot of money, and everything we bought had a coupon attached to it. And we would save sometimes 100. Even I remember one time we hit it was triple coupon day. We got up to saving $200 at the store. Well, that's what it's all about for being a 1099, an independent contractor. Any of those expenses that you have are essentially your coupons. Those dollar for dollar offset your income. And I want you to think about not only the cost of your phone or your utilities or things that are like very clearly for business, but also what about cocktails or drinks where you've gone out and you've spoken about business, books that you've gotten from Amazon, courses you've taken. So do some research, because what I find here, Beth, this is where, as an independent contractor, so many people leave money on the table, not taking as business expenses things that they truly are entitled to. And if you're not sure, this is another great example of reaching out to your accountant, having them review that. And what I would say too is make it easier for yourself. If you didn't do it this year, do it next year. Have one credit card that anything just even sniffs of a business expense, you put it on there. Anything that's clearly personal, like getting your hair cut, things like getting your nails done, going on vacation, is on your personal card. Keep them separate, like oil and water. Oil and water never mix. Doesn't matter how many times you shake them up. That's what you want to do with those expenses too.
I love that, and I just think it's so easy too to have those 2 credit cards, one for business, one for personal. Just keep, as you said, oil and vinegar, keep them separate. Such great advice as always, Stacy. Thank you so much for being here and for being such an attentive and engaged audience. Thank you again, Stacy, for taking time, especially out of your busy schedule right now as we head into tax day. Thank you so much for sharing your expertise on our financial health with us. And thank you all for joining us on Women Talk.
Well, thank you so much, Beth. It was just wonderful. I love what you're doing. And I just want to share again. I know we went through so many things so quickly. So if you do have questions about your unique situation, please do feel free to reach out to the Savvy Ladies Helpline. The information is down below so that you've got that. Again, savvyladies.org, free financial helpline. We're here for you.
Love it. Thank you.
Thanks for joining us for another episode of Women Talk. Stay tuned for more Healthy Women live events at www.healthywomen.org. You can also follow us at Healthy Women on Facebook, Twitter, YouTube, or LinkedIn, or follow us on Instagram at healthywomen.org. We'll see you next time.